It's bad to sit on the wrong side of the table, or I get introduced first because you have to be the first one to go. And I was actually kind of hoping to be last, but that's the way it goes. When Stu called and asked for my participation in this panel and asked if I would make some comments about leasing trends and the directions that they are going right now, the interesting thing for me was that, as of most of you and all of you probably know, that November 1st was a fairly critical date for most leases, and I was actually actively negotiating leases in November and renting some farms, and most of my cash rents come due by the 1st of November. So we're refiguring according to what this drought year has done for us. And the surprising thing, as we were bidding some cash rents this fall, there's a tremendous variation this year, more so than I've ever seen in my career, from one area to another as to how this drought has affected the crop. Where I live, and which I manage primarily west of Springfield and south over to the Illinois River, and then south 2 or 3 counties down, we had a drought, severe but not as bad as when you came this direction, and especially hit around the Decatur area. But as you go further south into the Litchfield area and Montgomery County, the drought was more severe in that direction than where we were at. So the leases that I was negotiating this year, actually, and bid out a couple sets of farms, we actually saw an increase in those bid rents by about 10% from what they were the previous year. And I'd say 90% of that has to do with the actual gross incomes that were going to be received on those farms, because as you well know, and as Gary showed in his slides here just recently, was that we're going to see a higher gross income this year than we've seen in any year previous to this, and especially in my career. So that, I'm sure, was leading it as we were looking for a little more optimism of better yields and possibly starting with some good support prices here to get us started on this coming year. So we did see an increase of about 10% on the bid cash rents. Consequently, that led over into some of the same as I was negotiating individual leases with farms and farmers as to what their actual yields were and where they were going. Whether that's sustainable, and I think Gary even led that in this next year, I think we will see a good price for 2013. Whether we go into 14 or not, I'm not sure. A lot will depend on where we're at with supply demand and what kind of crop we're going to be producing in this coming year. But I also look at, one of the other things that I look at very strongly is the soil productivity when we're starting to set these, because all of my cash rents, I mean, I just don't walk out to somebody and say, the highest rent I'm getting is $450 an acre and everybody's going to pay that no matter what. That would be foolish for me to do, because every farm is not created equal. I have that dubious honor of trying to explain that to farm owners who are not farm operators, who don't really understand what their farm is and how that farm differs from neighboring farms and what the farm might be worth. So I try to explain to them what that productivity index indicates as far as what that farm is possible to produce, and the fact that that operator needs to make a little money as well as you do. But I do understand who I work for. I work for the owner. I try to meet their goals and what their expectations are on that farm. And believe me, there's a wide variation of what people are after on their own individual farms. And to their credit, most of them look very seriously at making this a sustainable business. So I'm seeing an increase in cash rents this year. I'm also seeing a very sustainably strong market for the land, and the prices are strong right now, and I can think that in 2013 we're going to see those prices continue to go.
This past year, we deal with several different types of leases on our farms. The flexible cash rent lease has really gotten a lot of attention since the prices have gotten higher. A lot of landlords and farm managers have really switched to that. There's good and bad things about that. The good thing is it allows the landlord to share, in that profit. Bad thing is everybody has got their own version of how that needs to work, and no formula is the same. So it really adds to the management end of what we have to do. Each lease is a little bit different about how they determine a selling price or a value. Most of them tend to at least use the yield the farm actually produces, which is helpful. But average cash price from a local elevator seems to work pretty good. Selling price works pretty good. the lease that I prefer, and I think is probably one of the most fair leases, is we kind of drew it up on our own. It's a kind of a 50-50 flexible cash rent combination. We take what the farm actually yields times a selling price. So if you want to take work with the landlord or farm manager, whoever, or sometimes they leave it up to us to decide when we're going to sell that crop, and then subtract the actual expenses from that farm. So, you know, if you've got higher fertilizer costs one year, or you need lime or things like that, and then we take that out and subtract their base, and then we make whatever their base is. So say it's $150, and anything over $150 that we make, we split, and that seems to work pretty good. It's just not always the highest rent, but it's one of the things that I think keeps it fair for both parties. And this year so far, it looks like it's going to work out pretty good for corn and beans. One thing I would like to stress that this year raised a lot of attention in some of these flexible leases is the crop insurance part of it. I've heard some scenarios where, you know, crop insurance wasn't mentioned in the lease, in a flexible lease maybe, and some people are, you know, you're getting to the end of the year and your corn made 100, but you're guaranteed 140, and you know, you might be making, you're worried you're making a little bit more money than what they think they're deserving. I don't know if I'm saying that right, but if I'm guaranteed 140 and the farm makes 100 and I'm paying them cash rent based on 100, if there's no insurance clause in there, and they're coming back and asking, you know, why aren't we using crop insurance? Well, we've never even talked about it. It wasn't in the lease. So that's one thing I would stress to everybody here is for upcoming years, whether you decide to work with crop insurance with your landlord or farm manager or not, is put it in the lease either way so there's no confusion between the parties, and it eliminates some hard feelings maybe, or some ethical questions that might come up down the road. As far as what to pick with the landlord, I really don't know. I was trying to think yesterday of a good analogy, and I kind of think I'm kind of like a chef at a restaurant, and let somebody comes in and has a menu, and there's 7 different types of leases on it, and they bring me whatever they want, and it's my job to make it work, I think. So with that, there's all kinds of different leases. We'll be open to questions, I guess. It's hard to really talk specific on one lease.
Well, is this on? Okay, now. Yeah, I work for a small property investment company here in Decatur, and we have farms located in Macon, Moultrie, Shelby, and Christian County. We normally negotiate our leases in the fall, September timeframe, September 1st, so everybody can get their inputs on, know where they stand before they put their inputs on in the fall. And the farms that we rebid this year were cash rent mostly. Didn't see really a whole lot of change from last year. It's kind of interesting as far as the drought, how the drought would affect that. But the last few years, really, I haven't seen a whole lot of change in we do bid them out. The kind of comments that I've been getting, I mean, just meeting with farmers in the fall, basically, you normally are talking about drying, problems with drying your crop, or tiling issues, going over yield maps and that kind of stuff. I mean, that hasn't gone away, but it's kind of been replaced by issues with market timing. Did I sell too much, or did I sell at the right time? Crop insurance, storing grain, you know, the issues with storing grain now that's been damaged by the crop, whether it'll keep or not. Also about inputs for next year, you know, whether we should change the P and K, how did the drought affect that, and how are we going to change the inputs on that. So I do see, I mean, psychologically it could have been a disaster, I think, this year with the drought, but after it got past about August, it seemed like people felt like they were going to get their payments, and just the timing on the payments and so on. So operators handled it a lot better than than it could have gone. I do think that crop insurance is going to play a bigger role now. we do require in our leases to have crop insurance, so that's one thing in the cash rent lease that I would recommend putting in there, and at the level too. That's all.
Anything else? Well, I should say, in addition to being a lender, I'm also a landlord. My family farm is owned by my brothers and sisters and I, and my brother farms it over at Houston. I used to have an arrangement with him for cash renting it, but he preferred the crop share, so that's where we have it now. That was his preference, and I think it was driven more by managing the volatility, which I thought maybe I'd just share with you from our perspective as a lender. You know, we finance a lot of landlords and operators, and we're interested in the terms of the leases that they have, but we actually don't get involved in negotiating those or even seeing them until after the fact. So I thought I'd share with you maybe just some anecdotal comments about what we see as trends. Straight cash rent is the most common form that we see, and it seems to be taking over from the crop share, which there's not a lot of crop share in the central part of the state, although it still is pretty prevalent south of I-70. We cover the southern 60 counties in the state. I think the crop share may be the most fair to both parties, but it's so difficult to manage. There's been an increase actually in the flexible lease terms. I hadn't been monitoring this, but looking at what's happened recently, I think with the increased income opportunities, there's been a pretty drastic increase in the flexible lease terms. But I think, as it was mentioned, there's so many different types of those, it's hard to keep track of those too. We don't see very many custom farm operations, although that's not all that uncommon. And 3 to 5 year lease terms are not all that uncommon either. So, you know, not every farmer's, not every tenant's farms are coming up for lease every year. Some may last 3 to 5 years. So I guess one of the things that came out of today's discussion is the realization that if you're locking into a long-term lease at a high level, and there's the potential that will rebuild stocks and the resulting lower prices may not give the income potential in the out years of that 3 or 5 year horizon, that could be a challenge for the tenant to afford that, and it may not be the fairest lease around. And I guess the other observation I have about looking at our customers that we see cash rents, there's a really wide range from, you know, we see the average rent in the county may be $300, but the range is very wide. It may go from $200 to $500. And I guess we see more in the moderate end of that range than the high end of the range. I don't know why that is, and actually the ones that are paying the higher cash rent that we see aren't necessarily the ones with the strongest balance sheets. So they are taking on more risk when they do that. The impact of the drought, you know, actually I think the way the crop insurance has protected the balance sheets and the downside, it's actually maybe spurring more demand for buying land or for renting up land, given these income opportunities. But it is I think it does serve as a reminder that there is a lot of volatility out there, because we've seen a $3 run-up in the price of this year's crop and then backing back off. So depending on where you price it, it could be a problem in covering the cash rent. And I think it was also mentioned that taxpayer awareness of the ag subsidies that are involved in this, coinciding with the timing of the Farm Bill, I think is a challenge for the ag community. I do know that Secretary of Ag Vilsack is very interested in getting the Farm Bill worked through. He was disappointed it didn't happen before Congress broke, but I think he was aware that it was a more favorable time then to get the farm bill negotiated than what we're facing now. Balance sheets that we see are very strong. Earnings over the past few years have built working capital and built overall ownership equity. I think that has contributed to good demand for buying land and renting land, and we're seeing a very active market right now in land for sale. So it's happened 2 years ago. There was a big push at the end of the year. I think some of it's impacted by the potential capital gains tax increase. But it's a very active year. I just think a lot of liquidity drives a lot of demand. So I guess we'll open it up for questions still.
That's right, Don. Thank you. Let me ask all of you. Jerry, you've got farms that don't have much subsoil moisture. Doug is renting land without much subsoil moisture. David probably owns some farms without much subsoil moisture. Don is lending money to people who are renting farms without much subsoil moisture.
I see a trend.
People kind of see the trend here. Is there any impact on that? What's the value of land? What should rental rates be for land that just doesn't have much water under it right now? I knew that would happen.
We're kind of going into it. I mean, things so far look like they're going to be pretty level, kind of what we were going into at the beginning of 2012. So, with the crop insurance and pretty much input costs are pretty much leveled off, a little bit increase in seed. Rents seem to be, our rents, for the most part, I think if there's some new farms are up, it sounds like they're going for a pretty good price. But for the most part, working relationships with landlords and stuff, rents are staying pretty much level. So I guess we're just going into it preparing for a normal year, and with crop insurance, it kind of gives you a little peace of mind. And
Are your tiles running?
no.
David, are your tiles running?
Well, one good thing about this is that I have been able to get my tiler to come out and do more work now.
So your land is more valuable then?
Well, the drought, I think Gary in the previous discussion talked about how the epicenter was in the south. And I mean, between our most southern farm, even in Shelby County, and the ones in the northern part of Macon County, you can tell the difference. And by the time you get up to Bloomington, it looks like a different crop. So I imagine if the concern is there, I guess it will be a regional concern, but maybe crop insurance and the market price might mitigate that some.
Jerry, have your operators expressed any concerns about soil moisture and the cost of renting land?
No, not really. We've talked about the fact that we don't have tiles running right now, but we are getting some moisture, and it is coming at a very nice low, slow pace. So it's soaking into the ground instead of running off the top. But they haven't actually. I mean, each one of them, I guess, maybe as an indication of when you're bidding a cash rent, for instance, they bid higher than they did the year before. So evidently, they're optimistic that our growing conditions are going to be somewhat similar to normal, whatever that is. We're obviously not going to be going into the spring unless we get an awful lot of snow or rain over the winter. We're not going to go into the spring with the subsoil moisture that we've had in the past. But I've had tilers calling me asking for business because obviously there is no water problem since we don't have anything running right at the moment. So they must be looking for business. So that's a change.
Anybody who has a question, please feel free to raise your hand. You've got more than I have here, so don't hesitate if somebody's got something. Any of you? I'm sorry about that. Any of you really getting involved with in a proactive way in risk sharing between the operator and the owner? Doug's leases all have basically, or at least the ones that he described, the owner takes part of the risk in that. But Jerry, are any of your owners, are they willing to share the risk with the operator to make, if in case they've got a real good operator that they want to keep and don't want to lose?
Oh, yes, yes. We have all kinds of leases, not just the cash rent leases, but with crop share, when we have the flexible leases as well. And there's as many kinds as Doug describes out there as to what they feel comfortable with. But in my opinion, when I'm really looking at something to try to be as fair as I can between the owner and the operator, the flexible cash rent or flexible crop share lease with the supplemental cash rent on top, which is based off of yields and prices set at different times. And so therefore, at the end of the year, whatever the yield actually turns out to be, whatever the prices on 3 or 4 different strike dates work out, kind of shares that risk. They can benefit from an increase if their prices were increased. And shockingly enough, this summer, when and all those leases, we'll be figuring those supplementals right now. The thing that kind of surprised me was our early strike dates, of course, were in those 580s and $12 and a quarter soybeans. And when they hit August is when things really shot up, but we still are going to have a cash rent due because of the gross income is going to be that high. Even with the lower, I mean, we're talking 50 to 75 bushel difference in corn yields, lower.
David, I know most of your operations were straight cash. Do you have any flexible leases at all?
No, I don't. I was at a landowner's workshop, Farmers National, in September, and I got some information a little bit on the percentage that they have of the 5,000 farms that they manage. 44% are on cash rent, and 36% are share crop. Their share crop is going down, and there's the remainder of that percentage is in this custom and blended, and the blended would be like cash rent, flexible type of an arrangement, and those are going up. So, I mean, I could see it in the near future of us looking at some type of a flex cash rent, especially with the volatility that's going on.
Do you have operators that you think are just really number A1 that that you really would like to keep under certain circumstances?
Yes, but you can do that under cash rent too. It's just sometimes when you don't always take the highest bid, if the bids are close, you have to look at extenuating circumstances. And if you know the person and you know what kind of a job they do, then you know that makes the decision easier.
Anybody want to ask a question? If you, I know Doug mentioned one of the things, his comments was that a fair cash or a fair lease for 2013. Jerry, under the environmental, financial, marketing circumstances, what do you think is a fair lease for 2013? What type of a lease? Well,
A lot will depend upon what my owner is interested in accomplishing with that lease, but personally, if I was renting my own farm for what I would like to see, I would go on a crop share lease with a supplemental lease on supplemental cash rent based on the income at the end of it. I mean, that to me shares the risk. I think most of my owners are cognizant of the fact that there is a lot of risk out there in that business. They're pretty reasonable when we renegotiate rents every year. When I talk to them and we talk through what the scenario is. I have several that come back and actually look at the farm, not all of them, but a few that do come back, see what kind of yields we look like we're having, look at the scenario. I mean, those are the people that come from a farm background, which is very helpful when you're trying to explain what the crop conditions are for the year. But yeah, I think many of the owners that I deal with are very aware of the plight and trying to share some of that risk at the same time.
Okay. Doug, you had mentioned what you thought was a fairest cash lease, or fairest lease for 2013. It was a blend of several different things, as I remember. Please tell me again what that was. I'm not sure that I caught all of those factors.
I don't know if I explained it very well, but Basically, you take the gross income, so you take the sell, and however you want to determine that price, it's up to negotiation between you and the landlord. But I like to use the actual selling price because that takes, whether you do that in 4 different times throughout the year or whatever. Like this year, we sold some corn. Everybody did. So like they said earlier, sold corn early, and then it turned out to be a bigger percentage of your crop than what you hoped for. But by doing it this way, it eliminates, paying a rent based off $7.50 corn when you sold it for $6. But take the gross income, and we take the actual expenses for that farm. So your actual seed, chemical, fertilizer, every farm's a little bit different on fertilizer, and come up with a net number, and then subtract out your base. You'll guarantee the landlord a base, whatever that number is. Say it's $200, and then whatever's left, I'll subtract $200 off myself, and then whatever's left over that we split. And that's just a little homemade formula that we've come up with that's worked really well with. So, it's kind of like a 50-50, but it gives the landlord a guarantee of a cash rent and then allows them to share in the good years too. But it takes actual numbers for those actual farms instead of a broader, some of these flexible leases just come up with a figure based on cost, whether, whatever that might be, $500 an acre or something like that. So it's more specific to each individual farm. It takes a little bit more management, a little bit more bookkeeping, but we've been real happy with how that's worked.
Yes. What do you use? How do you figure machinery cost? The question is, how do you figure machinery cost?
On the costs on that type of lease, we don't use machinery. We just use our seed, chemical, fertilizer, nitrogen, and then out of that, then give the landlord their base guarantee, and then out of the guarantee I have, that's where I take my machinery and profit and labor costs.
Yes.
I'm going to switch gears a little bit. You mentioned tiling has become more prevalent in the last several years and probably going to continue. Jerry and Doug, how do you handle a situation when tenant would like to see a farm tiled, wants landlord to pay for it? Do you typically work on just simply adjusting the cash rent, the flex rent in a way to help compensate the landlord for his investment, or do you have any joint ventures on tile where the tenant and landlord share in the cost? And if you do, how long of an arrangement do you typically are agreements put together for that?
Did everybody hear the question, or did anybody not hear the question? Okay, Jerry and Doug?
That's a good question. I actually had that scenario this year. The landlord we've had a long relationship with, the farm needed tiled, and we used this type of flexible lease with them, and they didn't want to come up with the money, so I went ahead and paid for it, and we came to an agreement that we're going to just deduct, it was a $30,000 project, and we're going to take $5,000 off the rent the next 6 years. They didn't want to come up with the cash, and I really needed the tile, so that allows me to get the benefit from the crop and allows them to, not have to come up with the money for it, but still, and hopefully they'll benefit from that tile through the flex part of the lease over time.
Do you have a 6-year lease then?
Yes, if you're going to do that, you need to get that in writing with. Yeah. This is with a family member I'm not too worried about, but that's how we pursued that, and that's how we're going to handle that in the future. But yeah, you definitely want to get it. If some people might want to do it in 3 years, but yeah, I definitely get it in writing.
Jerry, any comments?
Well, and that's a big stumbling block for most of the owners that I deal with. When you start looking at what that cost of putting in tile over any number of acres, and they start looking at what that investment is, many of them live off of that income, and they don't want to give it up. So that is a problem, and I like Doug's solution. That's a good way to do it, and especially if you've got a long-term relationship with an operator. And in many of our farms, that's the case, that we could put them on a long-term. I mean, I've got an irrigation rig we're considering this year, because obviously this is a very good year to preach irrigation and the benefits of having an irrigation rig. And we could increase the bushels on that farm this year, especially 100 bushels to the acre. It doesn't take very long to pay for it, but the operator has suggested he pay for the irrigation rig, and then we just pay him back so much every year for his cash rent.
Other questions? Yes.
Yes,
Dale.
the question was brought up on the crop insurance on flex leases. When we look at the gross, I'm curious, Doug mentioned this, got $200, $300, $400 an acre gross crop insurance payments, and if you figure the percentage of the gross, do you bring in the crop insurance or not? Most of the leases do not address that. They may in the future, but I'm curious what their thought is moving forward. How do you address that? And I guess farm managers, whoever, are saying we're gonna bring crop insurance in that gross calculation figure. Are they willing, or is the landlord willing to pay a percentage of the crop insurance premium cost?
Okay. Any input on that? David has already talked about that because he had required crop insurance in his leases. Are you paying part of the
Well,
the premium?
It's not so much a factor in the cash rent because I wouldn't be a benefit. I also require an irrevocable letter of credit. We give the tenant the option of either paying the rent up front or paying it two parts in March and then in November. If they want to pay it two parts, then we require the irrevocable letter of credit, which also is incumbent on them to, have as part of renting with us. So with a variable cash rental lease, I would think, crop insurance would be mandatory because if you're a landlord and you're taking some kind of a share crop or variable rent and your tenant doesn't have a crop insurance, why? You're taking on a lot of risk.
How about Jerry or Doug or Don? What about how is that crop insurance going to be handled in a lease? Because the operator at this point has to pay the premium, and the way the crop insurance is, an owner doesn't have any share of that unless they've got a crop share lease. So how would you incorporate crop insurance into a future lease?
I think that's going to be tricky because it's kind of determined on what kind of, if I have an enterprise unit or an individual unit or grip they're dependent on me. If I have an individual crop insurance, for individual farms, I think most people that have talked to us are willing to pay for their portion of the premium in a flexible lease if we're going to use the income from crop insurance towards that flex formula. But it's up to negotiation probably as far as if I got an enterprise unit, it's just a big question right now. And I think that's what people are going to be talking about here throughout the winter and in upcoming lease negotiations. They can't force me to take, specific insurance on all my farms if I don't want to. And you can't do different insurance within the same county. So it's kind of a gray area right now. I don't know.
Don, your whole day is filled with managing risk and managing the people who manage risk. Now, we've got a whole bunch of farms out here that have a lot of risk. And what is how would you recommend that risk be addressed in today's leasing scenario? You said you don't see the leases until maybe after the fact, but what sort of guidance do you give to many of your loan officers about farmers and their risk management practices?
Well, we don't get involved in farm management decisions. We're making a lending decision, and we're assessing the manager's ability to manage their risk and what kind of balance sheet they have to stand behind that. The question of a variable lease and the use of a crop insurance policy gets a little problematic in if the landlord requires a tenant, for instance, to buy an 85% coverage policy, the premium is going to be much higher than it is at 75 or 80, and it benefits the landlord to have that done. The other problem that I see is it's not uncommon for lenders to need to take an assignment on the proceeds of that policy, and that if that's already partly assigned to another party, that is a problem as well.
You've got nearly 2 million acres of crop insurance out there. And what sort of what sort of concerns do you have about that risk management, that risk sharing that would be covering?
Those policies are, I'm not familiar with how many of those policies might have another counterparty that thinks part of the proceeds come to them, but the way the crop insurance performed this year, I think it's proven to be a very effective tool in managing downside risk. The biggest issue that came out of this year in teachings may be the timing of when to pull the trigger on sales when you may have a short crop. And I know a lot of people who did pull the trigger early unwound those before it got too far down the road, and so they dampened the negative impact from that. But most of these farm operations that are heavy in cash rent, or even farming big dollar operations today, they do a pretty darn good job with assessing risk and managing risk.
Anyone else? What sort of lease innovations have you really encountered? Do you think to yourself, wow, that is really something I would like to see how it works? Doug has mentioned several of them, but for the rest of you, just those innovative factors that say, this would really do it for me and my partner.
Frankly, I haven't seen many that are all that innovative on sharing the expense. I like the example that Doug gave, because most of the innovation I've seen is a % of the gross, and it doesn't take into account the expense load that the tenant has. So I'm intrigued by that. It sounds like it may not fit everyone's ability to maintain the records to provide for that, especially if they're commingling grain from different fields and that type of thing. So it may be a challenge to implement, but I like the innovation of it from a risk management standpoint.
Dave, any kind of lease that you would really like to experiment with, and if so, what would be the first one that you would like to see if something innovative really caught your attention?
Well, probably the cash rent with the variable aspect to it, like percentage of the, it'd be like a base cash rent, $300 or something, $200 base with a variable in the net, like 40% of the net, or the percentage would have to vary, I would imagine, based on how that could be negotiated. But I probably wouldn't venture too far from something really exotic other than that.
Jerry, how about you?
One that kind of caught my attention today was the custom lease that had a variability, I think, added onto it for actual yield to increase above a base. I kind of like that idea. As far as maximizing the income to an owner, that would be one that would seem to me to add a little plus on top, because a custom lease is pretty attractive if you're willing to accept all that risk.
Question here. Yes.
As a property owner, one concern that I have is the fact that maintaining the fertility of the soil. If you have a cash grant, how do you monitor what fertilizers are put on, as well as the long-term fertilizers that you
Question for the panel was, how do you, in a cash rent, how do you monitor the fertility levels, how much is put on the fields? Jerry, you probably, that's
Yes.
probably most applicable to you.
Right. Well, that's utmost and key, and that's a very good question, because to me that's the first thing I will point out to an owner, especially if they've been on a 50-50 lease where we've maintained that soil and have it in a very good condition, productivity condition. We require copies of soil tests. We also require copies of fertilizer that has been put onto those fields, so that we actually get those records from the fertilizer company that they're dealing with, and that's in our lease, and that's something that we do monitor. It's very important, because otherwise you're mining the value of your farm for future cash rents.
Dave, is that part of your lease?
Yes, it's,
Generate the amount of fertilizer has to be placed based on the yield, or how do you determine?
Yes, well, it has to be at least a replacement of what's been removed from that, from the previous crop. That's a minimum, yes.
yeah, I agree. We have like, we get yield maps, the load sheets for the yield, and then, you know, based on the removal rate, just the Illinois Agronomy Handbook, you can go in there and there's a table based on the soils. You can see what replacement rates would be required.
Anyone else? Other questions? Other topics for these guys? Going once? Going twice? Thank you, gentlemen. Let's give them a hand.